another business day. It's time to do 55 minutes of current and relevant business conversations, and it happens here in Business Morning. I'm Ini John Mekwa. Let's kick it off from what's going on in the global oil space, where prices slipped, extending falls from the two previous sessions as pressure from plans by OPEC to boost output offset optimism over a potential US-China trade deal. Brent crude futures we see lost 0.46% to $65.32 a barrel. WTI also went down 0.44% to $61.04 a barrel, and that's because of headwinds for prices from OPEC Plus, which groups the Organization of Petroleum Exporting Countries and Allies, which includes Russia. They're leaning towards another modest output boost for December, and this is having curbed production for several years in a bid to support the oil market. The group started reversing those cuts in April. Following the sanctions, Russia's second largest oil producer, Lukoil, says that it would sell its international assets. This is the most consequential action so far by a Russian company in the wake of Western sanctions over Russia's war in Ukraine, which started in February 2022. And talking about what's going on in the oil space, let's speak to the Chief Executive Officer of financial derivatives company, Mr. Bismarck Rwani, to get his thoughts on this and a whole lot more. Mr. Rwani, good morning and welcome to the program.
Good morning, and thanks for having me.
A lot happening from OPEC. We're hearing more outputs coming the way, and it's already been concluded, I believe, that next year, 2026, we're going to have more supply. There's going to be a glut. But on the side with Russia, I mean, it's on the other side because the sanctions seem to be setting in, and now we hear that one of their biggest producers will be shutting down. How can this drill down? What impact can we expect this to have here in Nigeria?
I think that we have to look at it in the context of the global geopolitical situation. Mr. Trump is right now in Southeast Asia, negotiating deals with all of the Asian countries. So the likely outcome, especially now OPEC is putting pressure by threatening to increase supply, which means that we are looking at a situation where the price of oil could drop to as low as $60 a barrel, which has been the projection for some time. So if that is the case, what is the effect of a $60 a barrel oil on Nigeria? Don't forget, this is the time of the year when we prepare our budget for 2026. And the benchmark price for the budget last year was $75 a barrel. The average price today is about 62, 63, 64. So let us assume it comes down to 60. What do you think the benchmark price will be in the budget for 2026? The benchmark price cannot be above $65 a barrel. With OPEC increasing production, the maximum we will get probably is 1.75, 1.8 million barrels a day. Therefore, when you look at the price-revenue relationship, you will find that the budget for 2026 will be significantly lower than the budget for 2025, where we had a lot of optimistic assumptions. Having said that, it means that we have to use our resources more judiciously and more prudently in going on forward.
Is planning an expansion of its production to 1.2. That's supposed to be good for us as a country because supply, energy security, and of course, having more exports will also be good for the economy. But my thought is, what about the crude supply? Already we hear getting the supply is not that easy. So if he wants to expand to 1.2 million barrels per day, what about the crude to meet up with that?
There actually is expanding to 1.4 million barrels. And
1.4, thank you. Yeah, thank you, 1.4.
It will be the largest refinery in the world, competing directly, larger than the Reliance refinery in India. So having said that, the point is that we make more money from selling refined products than selling crude. So if we refine our own crude or take crude from different places, then we are able to sell it across the whole of Central and West Africa But having said that, I want you to note something, that the refinery business is high volume, low margin, and that the Dangote refinery, being the largest in the world, makes it a hub for the whole of Central and West Africa. So you have hubs in Rotterdam, hubs in Singapore, hubs in Houston, and hubs elsewhere. So the economies of scale and bringing down your average cost helps us to do something, that is, we are able to extract more value from selling to our neighbors, because the tankers come to the deep sea port by the refinery and then move products directly to Tema, to Monrovia, to Freetown, and other African countries all across the coast of French-speaking and English-speaking Africa. So that's a great thing for us. Now, if you look at the price of petroleum products across the West African region today, it's about $1.50. In other words, it's about 1,500 naira per liter in Benin Republic, in Chad, in Niger, and in Cameroon. So if that is the case, the differential between our prices of petroleum products here, PMS, and the neighboring countries does not give you the incentive to smuggle, because if you smuggle, you still have to pay all sorts of things to get across the way. So the reduction in smuggling, the fact that our actual consumption now is roughly maybe 40 million liters a day, right? So we now know the true consumption pattern. We have reduced the subsidy theft that is taken on. And therefore, from a global macroeconomic perspective, the expansion of the Dangote refinery to making it a major hub for the whole of Central and West Africa is the greatest news that the Nigerian economy could witness at this point in time.
How soon can we expect this to begin?
Well, first of all, they're moving from 640 to 700,000 barrel, right, making it the largest single train refinery, but it's a 3-year period. And the Afrexim Bank has actually come in to say that they are going to do everything to support it with about $5 billion US. What is more important is the fact that Dangote's refinery is going to be listed on the stock exchange. By listing it on the stock exchange, we think that you almost increase the market capitalization from what you have, about 90 trillion now, to maybe we are going closer to 200 trillion naira. That is what investors like to hear. One, there's a value add. Two, it's profitable. And three, the larger the market, the lower the average cost and the more profitable it is. And you are democratizing that. Every Nigerian will have a stake in it. It's not just the Dangote refinery group, but it's the Dangote refinery for all of Nigerians.
Yeah, Mr. Irwani, I know you're not working with Dangote directly and all, but since we heard that 10% of Dangote refinery will be sold, people have been calling to ask, please, when are they exactly going on? Because we have our funds ready and we want to be part of it. Any news, as any bird told you, probably when they'll be heading to the NGX?
In investment banking, we say buy on the rumor, sell on the news. So stay tuned.
Stay tuned. Watch this space. All right, Mr. Bismarck Rouhani, thank you so much for your time. And we hope we will get it here first. And
you will. And what's interesting that you can see the price of rice has dropped to 6,000.
Yes, we had that, the crash in the price of rice. Yes.
And by this time last year, we were buying rice at 110.
Rice and pepper. Mr. Rouhani, pepper, because I love pepper a lot. So pepper was a big deal this time last year.
Pepper has reduced, plantain has reduced. So there's a dirty, good December coming, right?
Hopefully.
Thank you.
Hopefully. Thank you so much, Mr. Bismarck Rouhani, Chief Executive Officer of Financial Derivatives Company. All right, now, so let's talking about the NGX there. We're still expecting Dangote refinery as well as the NNPCL, I must add. Let's not forget that we've been promised that for many years now. But let's see how the market closed yesterday. It closed in the negative, 0.10% down. That's what we had for the NGX. The good news is that we're still on that 155,000 level. Equity is 98.698 at the close of trade. Activity yesterday was mostly negative for volume, value, and deals. Top gainers were Aradel. Aradel made a huge jump yesterday, boosting the oil and gas counter at the close of trade. It gained 10%. NEM Insurance, almost 10%. ASO Savings also. I wonder what the interest is with ASO Savings. We've seen it move positively since last week. Top losers, Deep, Cap, Champion, and Lotus Harley, they lost more than 9% each, 9.71, 9.64, and 9%, 9.09. Their top trades were Access Co, First Holdco, and Universal Insurance. Access Co, we know they have, I will tell you more about Access Co in just a minute. They shared their results recently. And talking about results, let's start off with Transnational Corporation PLC, one of the listed conglomerates. They've announced their unaudited third quarter 2025 financial result, delivering strong growth across business lines. So looking at it here for Transco, third quarter 2025, so we see for revenue, they had 413.4 billion. That's up 39% compared to what it was year on year. Profit before tax, 124.5 billion. That shows an 18% growth for profit before tax, and profit after tax, 91.4 billion. That shows 20%. The gross profit margin is 48%. That's for Trans Corporation PLC. And then moving over to another corporate, Dangote Cement. Dangote Cement, we saw, was a major market driver last week, almost all through the trading sessions. And they started again this week, but I mean, profit taking will obviously set in. So looking at Dangote Cement, they posted a profit after tax of, okay, that's it for Dangote Cement. So for the third quarter of 2025, they had about 154 billion. That shows a 23.2% increase. Profit before taxes, more than 1 billion there, 156% increase. We say that's compared to 2024, so year on year. Profit after tax here stands at 743.3 billion naira. That's 166% increase compared to same period of 2024. Earnings per share went from 16 naira 55 kobo, that's what investors earned as dividend, from 16 naira 55 kobo to 43 naira 82 kobo. That's a huge jump of more than 150. In fact, 164% is what we see. So if you're an investor in Dangote Cement, I want to be your friend. You have been making some money. Total assets also grew by 10%, and net debt also dropped by 53.5%. That's for Dangote Cement. And from Dangote, let's look at that Access Co. We've seen it in top trades now since last week. I believe just before, as Mr. Irani said, you act on the rumors. Just before they released their results, some people got some hints, and they've had some moving. So we see Access Holdings here. This is H1 for the first half of this year. We see gross earnings there increased by 13.81%, interest expenses by 10.5%, interest income 38.8%, net interest income, and then earnings per share. Also, we see that. But we've seen the banking sector not so green since last week. So let's find out what's going on with Access and the others with Mr. Dr. Ayodeji Ebo. He's the Managing Director of Optimus by Afrinvest. Dr. Ebo, good morning. Welcome to the program.
Yeah, good morning, and it's great to be here.
So we see this results by Access Co, but we've seen interest on the stocks, mostly the bank, Access Holdings, since last week. Tell us, what can we say from this, especially when we compare it to the same period last year?
Okay, yeah, thanks. The first thing is to first of all look at it in detail. So if you look at it on the surface, you would see that looking at the bottom line, it's really down. And first thing, when you look at how to look at a business, whether it's growing, you first of all look at its top line. So, and you can see that for Access Bank, you would see that the top line also grew by about 15%. We look at gross earnings about 2.2 trillion. Yeah, so but there are some major impacts when you look at the PAT, like you just highlighted, the PAT declined by close to 55%, and which led to, which was as a result of increase in impairment charges. So we saw impairment charges increase by about 87%, and that's to about 2.30 billion. That also impacted, and the tax expense too also increased by close to about 50%. So that impacted the profit after tax. And for the investors, for Nigeria, perception is also that interim dividend, when you look at the custom over the years that Access Bank pays interim dividend. So that also came as a surprise, though not totally as a surprise, because we're all aware of the new policy of the CBN based on the forbearance policy. And what we think that Access Bank have just done was to make almost like full provisions, which means that by the end of the year, we should be expectant that the bank would have been off the forbearance list and will be able to pay dividend. But by and large, when you look at volume-wise, Access Bank still remain one of the most undervalued bank in the tier 1 banks. When you look at it based on price to book value at around 0.6, 0.7 times. So investors are currently trying to just position. I would always say, like when I advise people, you need patient capital to go into Access Bank, because what the bank strategically is doing now is expanding into different African countries, and it's going to be a medium to long-term benefit, because most of those assets will not immediately yield results instantly. So for banks, for those that understand how to identify undervalued stocks, they position now with patient capital, with the ability to benefit when we begin to extract the bank begins to extract value from some of the expansions that we have seen in recent years.
So, Dr. Ibo, when we look at results like this from the financial sector, um, we hear a lot of words, a lot of the use of the word resilience, even though that's mostly used for Africans and the Nigerian economy and all of that. But where do we see this resilience? And when we see where we are coming from, I mean, the FX last year was a major conversation of a lot of banks. Where do we see that resilience here?
Okay, I think the first thing that would see that banks, in terms of their resilience, is the ability to navigate the terrain. So last year, because of the FX that was volatile, banks like Access Bank positioned to benefit from the devaluation of the Naira, which benefited them. And this year, when you also check their books, interest income increased significantly by close to about 30%, which means that they were able to also enjoy the high interest rate environment from the high interest rate environment. Last year, when you look at MPR, this year was around 27.5%, but last year was significantly lower than that. And interest rates was also, if you look at the first half of last year, was also almost in single digits. So the banks benefited from that. Also, when you look at income on loans, so the bank also recorded significant increase in income on loans, which is also very positive. So, but by and large, that resilience is the ability to identify the opportunity amidst the challenges. Most of the banks have continued to push forward, and you would see that for most of them, even in periods when we have a lot of volatility and uncertainty, they tend to even do better in periods when things look very stable.
And all of this, we're heading to the end of the recap exercise. It's a couple of months now. We hear a lot of results of the banks. This bank has met up with the requirement and all of that. I guess we are moving boldly in confidence towards the end of that recap exercise.
Yes, as we approach the end of the year, like this week towards next week, we'll be expecting the third quarter result of most of the banks. We've seen a few banks like EcoBank, Stanbic published their own, and it's been positive. And we believe that a lot of the other banks will also follow that path. But one thing that we will also be on the lookout for is the increase in impairment charges as a result of the new CBN rule for banks that intends to pay dividend, that they should make full provisions for whatever loans so that they can be removed from the forbearance list. So we'll see that, but we still, by and large, is that there will continue to be opportunities, as the economy also grows, as stability and we see certainty in the economy. Businesses would also need to also borrow to grow, and the banks will also be a bit more comfortable to also extend loans as they see economy is growing. So I think it's really positive. And if you recall, most of the banks have also raised capital this year. So which means that that's enough fund for expansion and for more businesses in the coming year. So I would want to just highlight that compared to what we've seen the last few weeks, non-financial stocks have really done well. The banks have just remained a bit stagnant. But for those that have that long-term investment horizon, then it's the opportunity for them to take advantage of that when things look like it's really very stable. Ahead of the full year dividend, most of the banks would want to at least impress investors with their full year dividend based on their 9-month performance would be what would tell us what we should expect by full year.
And for a bank like Access and the others, we've seen the transformation from monoline commercial bank to diversified financial holdings. I guess that is also giving them an edge.
Yes, I think that, yes, it's positive. Like I said, in the medium to long term, that diversification will begin to enjoy the benefits. So, and it's investors that key into that vision now that will benefit long term. Because when you look at, they've just acquired in recent years in Mauritius, lent that in Kenya just paid for about 179 billion, paid for a bank acquisition of a bank. All those income from those are also going to be foreign currency based, because of by the time you are translating it to also naira would also be positive. So beyond just naira based revenue, also getting revenue from other businesses now as a holdco would help diversify. We are seeing it in some of the top banks that because of that diversification, it helps to create sustainability, because what investors need to look at is the sustainability. Then Access Bank, one thing that I think that would also jumpstart in terms of perception and valuation is the efficiency ratio. The cost to income ratio still remain high, but I know that with over time, with the acquisitions that have been done and they begin to yield results, that will also, as revenue grows significantly, we don't expect cost to increase at the same pace. And as such, that would also make the bank more efficient, and valuation-wise, investors will be able to place more premium on the bank.
Yeah, but Mr. Ibo, in spite of this positive outlook, um, since last week, or most of last week, and the beginning of this week, we've seen banking stocks in the negative, profit taking still going on. Can we understand the relationship between these two, optimism and yet profit taking?
Okay, yeah. So what we saw even from yesterday is sector rotation, which sometimes, so when you see a sector, non-financials have been moving, have been performing well, likes of Dangote, MTN, Aradel. So investors will temporarily sell down on areas where they feel that they can come back into, especially the banking sector, that they are not expecting much in this period, to benefit from that upside, and later on take profit from the non-financials and come back. So what we're seeing is sector rotation, which is also normal investment for savvy investors. They rotate from sectors that has greater potential. But for banking, I've said it's medium to long term. If you don't have long-term capital, you don't. It's not advisable to invest now. It's for patient capital. It's rewarding because when you look at it based on capital base alone, they have more capital to play with, and that would also mean more revenue in the new year. So that's part of what is happening within the stock market.
Dr. Ebo, thank you so much for that explanation. The sector rotation, I think it just looks like what's going on. at this time? Because we've seen a lot of activities around Dangote cement, and then we know that banking is one of the favorite sectors yet at the NGX. So thank you so much for sharing your knowledge with us this morning.
Always my pleasure. Thank you for having me.
All right, so let's take a break now. When we come back, we've been talking about insurance and the reforms around there. What about insurance education? Is something you want to listen to after the break? Please stay with us. Welcome back. It's still Business Morning right here on Channels Television, and we're discussing insurance now. Recently, we've been hearing NIRA here and NIRA there. A lot of reforms going on in that sector. But of course, I'm sure you want to find out, so how does it concern me? What's my business with all of this? Insurance has been perceived as a fraud by most people, especially here in Nigeria. But I think I have some individuals who can clear the air this morning safely. Safe to say that we have the chairman, College of Insurance and Financial Management, Mr. Akinjide Urimolade, here in the studio. I also have Dr. Chizoba Ehiogu. She's a rector, College of Insurance and Financial Management. Both of them here to educate us and maybe try to convince us that insurance is more than a fraud. You're welcome to the program.
Thank you very much, Eni. Good morning, Nigerians.
Thank you for having us, and good morning, Nigerians.
Good to have you. So let me start with ladies. Pardon me.
It's okay.
So we hear a lot of reforms going on in insurance. NIRA is what we've been hearing, but a lot of people will ask, so what is it and how does it concern me? I'm talking of the average Nigerian now, not the elites.
Okay, thank you. NIRA, which is the new act, Nigeria Insurance Industry Reform Act 2025 has come to replace and consolidate the Insurance Act of 2003. And the act itself has come to modernize and strengthen the activities of insurance industry by law. And so what is the new act bringing on board? Bringing about modernizing the activities of insurance industry in terms of capital base, capital requirement to strengthen the abilities of insurance industry to carry on more risk. And also it has also come to strengthen claims efficiency and settlements to the policyholders. And also the NERA Act also has come with an element of digitalization of insurance products in such a way that the underserved in the insurance in the Nigerian market will be able to be reached through Takafu insurance, micro insurance, and also agricultural insurance.
The microinsurance, I believe, is the one for the informal sector.
Yes, informal sector. So there is this inclusivity in the act that ensures that through NERA, the penetration of insurance industry in Nigeria, which is less than 1%, will be deepened by this act. And also the act has also come to bring about compliance to laws. You know, as this is a new act, there has been acts and there have been laws before now. But this is coming with so much strength and powers to the NICOM to be able to regulate, also to monitor and to penalize. It also came with sanctions for non-compliance, both to the regulators, board members, and even to the society as well. So is an encompassing, is rich, and is something that will benefit not just the insurance industry, but also bring stability to the Nigerian market as a whole.
All right, let me come to Mr. Rimolade. So it sounds interesting. And I've had previous conversations on insurance. The one the micro one that connects to the informal sector, because we know the Nigerian economy is largely informal. That has been like the most interesting, but also the least adopted. Because, I mean, for those who are in structured employment, you are compelled to. You have laws watching you, and, you know, companies have to do it and things like that. But when you come to the informal sector, how do we make it work? What's the plan? Because having the law is one thing, sounds interesting, but making it work and for adoption, that's another.
Thank you very much, Ini. You know, for the micro insurance aspects, one thing is that our regulator has been able to come up with the guidelines in terms of the micro insurance. And when you look at the lower end of the pyramid, that's where they fall into. And then we are talking about financial inclusion, you know, whereby, you know, Nigerians and anywhere they are, you know, they will be able to take up, you know, insurance products. And we know that insurance is all about protection, you know, no matter, you know, the smallest assets that you can talk about, you know, when you have insurance in place, you know, if there's fire, if there's special perils, if there's theft, you know, insurance can be able to cover it. And at the same time, too, you know, among these demographics that we have within the economy, there are, you know, situations whereby they have dependents, you know, situations that maybe they are no longer available. They can take up a life insurance to be able to take care of their, you know, the education of their children. So those are the things that, like I said, the regulator has been able to, you know, put guidelines in respect of that. And couple with the fact that in terms of the distribution too, we have brokers, you know, that are conversant, you know, how they can be able to reach out to these various sectors of the economy. At the same time too, agents too, you know, based on the fact that they are well trained, they can be able to talk to, you know, this informal sector of the economy, and then for them to be able to take up insurance products.
So when you say, so do companies, I mean, you are the MD of IBTC Insurance. Do you have people you employ intentionally and say, oh, go to Ajegule, for instance, you understand, and talk to them? Okay, our office in Enugu, go to the village there. Is that what you're doing? Because, I mean, when you talk about the rural, where you have a lot of this informal and those who should participate in micro, getting there to them, convincing them, and making them prioritize insurance. As somebody said, you know, we believe in God so much in this part of the world. God is our insurance.
Exactly.
So you want me to leave my God insurance and spend money for a future which I do not know how it will turn out? You need a lot of conviction.
Yeah, you're perfectly right. And that's the reason why, in terms of segmenting the insurance practice, just like, based on what you said, for Stanbic IBTC Insurance, we are not a micro insurance company. There are some organizations that are coupled based on their capital base that they focus on micro insurance. And then, as rightly said, because they focus on micro insurance, ability to be able to now get, in terms of distribution, to be able to train their agents, for them to be able to get to these particular areas of the market, to do market storm, places like Aba, places like Ajegunle, places like Agege, they can send their financial advisors or the agents to those areas and then begin to let them know the importance of taking up insurance to cover their lives and also their properties.
Let me come to you, Doctor. When we talk about opportunities and benefits, perhaps you should let us know some of those things. But this time, let's move away from the micro to the big organizations and all of that. Insurance has been there. I don't know how many people purposely go out there to say, I want to insure my property, my house, apart from the third-party insurance, which everybody is compelled to. So maybe you should help us to understand the opportunities and, more importantly, how to access those opportunities. Because a lot of people have a problem with insurance when it comes to accessing the benefits and the timeline, to access it.
Okay, it's simple. For insurance business, we have cadres and frameworks. So we have the regulator, we have the NIA, which is the umbrella body of the insurance industry in Nigeria. We have also the educational body, which is the...
That's where you're rector.
Yes, which is the Chartered Insurance Institute of Nigeria. We also have the brokerage, which is the Nigeria Registered Insurance Brokers. Also, we have the law side. So there are different arms. So for businesses in insurance, the best approach is to approach any insurance company for any type of insurance policy. We have the life insurance companies. We also have the general insurance, which insures properties and the likes. So to know what kind of policy suits my business, and you'll be advised appropriately the right businesses to be done. That could be done through the brokers, that could be done through the internet, the lifeline of different insurance companies. So you can also walk into any...
So individuals cannot deal with an insurance company directly. They have to go through a broker, or the broker is an employee of the company.
No, the broker is a professional, is an intermediary, intermediates between the insuring public and the insurance company, because they have the professional knowledge of the products. They have to advise the insured on the best products suitable for them, the best companies to underwrite their product with, and all the necessary advice that's required to secure a business. So they are there to speak for the insured, and also to conclude that transactional business between the insured and the insurer. But beyond the brokers as well, they can operate through the lifelines of the insurance companies, through their retail sales, through their lifeline. They can also go online to check out the policies that are available for the insurance companies as well. So when this is done, there is a processes to that. Proposals are given, documentations are given. If the risk is found adequate by the underwriter and is secured, they will be issued a policy. And everything about the risk, about the claims, the processes will be itemized. And
the timing, people have a lot of problem with the timing.
Okay.
Do they come through when? I mean, if somebody loses a house, for instance, and is stranded, then if it takes forever to be able to access the claims, that's a discouragement.
No, not at all. It doesn't take forever. Those things are assumptions most times. Insurance company pays claims real time. So what you need to do is, when a loss occurs, you notify the insurance company. And even as the insurance company are also getting to know that a loss has occurred, maybe there is a fire incident, as they're also watching through this television or reading the newspapers, they're also aware that this risk has occurred, and also making plans behind the scenes to be able to garner all the necessary requirements if there is need to be investigation. But all of that has been shortened, and that's what NIRA is bringing in to ensure that there is prompt and efficient settlement of claim and on time. And so that is why we're in business. Definitely, we're in business to pay claims, and that's what the insurance companies has been doing. And NIRA has made it in such a way that it's being prioritized. Claims payment is counting one in the list among the provisions of NIRA. So, thank you.
Yeah, Mr. Rumale, how much adoption do in reality now? I mean, you sit on the board of Stanbic IBTC Insurance, so I want to believe you get data. How many people actually come to insure their properties, especially houses, you know? How many people really do that? Is it a growing culture? Is it a culture we still need to drive to grow? I know that the law compels public buildings to be insured, but then, I mean, when it's out of the definition of public buildings, then it's at your discretion.
Yeah, thank you very much, Jenny. You know, the way the economy of this country is gradually growing right now, you can see that people are accessing mortgages. There are lots of banks, where I work. You know, we have a bank as part of the subsidiaries. People access, you know, mortgages, and invariably, in terms of even accessing the mortgages, unlike in the past, is not easier because there are different ways that you can go about accessing mortgages. It can be maybe based on your pension scheme. You can take 25%, or you can apply and take the MRIF, which the government has been able to, you know, to put in place. And then once you take this mortgage, you are meant to do a mortgage protection. So invariably, insurance comes in as part of that. And then based on what she said, the Nigerian Insurance Industry Reforms Act 2025, the NIRA 2, has made some insurances to be compulsory. One of them is the public buildings. And, you know, public buildings too, when you have buildings that are more than two-story buildings, and then you have a tenant there, it becomes a public building. So with that, we are educating the insuring public to say, oh, look, you have a tenant, so these are the liabilities that are involved. So why not just take up, you know, fire and special perils, and at the same time take a liability policy, so that invariably, when this risk crystallizes, you know, and, you know, with the NIRA and also with a regulator right now, when it comes to claims, is something that they hold very close to their heart. So there's no insurance company right now that there will be claims and they won't be able to settle the claims. And most insurance companies right now, you know, in terms of even processing their claims, I mean, where I work, once you submit your documentation, within 24 hours or 48 hours, you get your claim check straight away. So we are making insurance to be easy, to be comfortable, you know, to make the insuring public to embrace, you know, that insurance as part of, you know, their daily living.
And are you eliminating, or at least reducing, the tiny print issue? Because, you know, there have been stories of when the incident happens, that's when the person knows that, oh, there was a tiny print that said it's only on this condition.
Right.
You know, that is also one thing that deprived the insurance industry of the people's trust.
Yeah, thanks, Ine. You know, insurance, we've learned from the past in terms of the small prints. All those things are being corrected. And then based on the fact that, you know, when you approaching an insurance company, you can go through a registered broker, which are intermediaries. Intermediaries can interpret for you, you know, in terms of what the policy entails. So it helps even the insuring public. And then most insurance companies right now, you know, based on what they have on their policy document, they do a summary. Oh, these are the things that you need to watch out for. So it has actually helped, you know, in terms of the way we communicate to the insuring public. And the trust, I can tell you, the trust is getting better.
Yes.
I like the way you say it's getting
It's
better.
getting better.
Because an average Nigerian would say insurance, no, 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 no. But you know, COVID opened our eyes to a whole lot of things.
Yeah.
And it's supposed to teach us lessons that we live with every day. Because when COVID came, a lot of disruptions came. And a lot of policies could not cover that.
Right.
I wonder, has that brought any change to the way you maybe capture your policies and all of that?
Yeah, thank you very much, Ini, for that. With COVID coming in, there are lots of organizations that they had their employees insured under the compulsory group life insurance. And unfortunately, those that died during those periods, they were compensated by the insurance company. And then coupled with the fact that, in terms of all the online that is currently happening right now, it was because of COVID. So you can imagine, unlike before that you have to go to the insurance company to be able to take up policies. But now, on the digital platform, on your mobile, you can actually take an insurance cover. So COVID has actually opened the eyes, not only the insurance sector, but I would say that all the various sectors, within the Nigerian economy. And good thing, with the COVID happening too, it has actually been able to pull a lot of people into taking up life insurance coverage.
Do you have insurance for cybersecurity? That's the thing now.
Yes.
Yes.
Cyber security, cyber attacks, those are real threats
You were right.
to businesses now.
Right.
And I think insurance companies should look that way.
Yes.
You're right.
Emerging
Most
markets.
insurance companies they have it in place. And like I mentioned, intermediaries, brokers, they always enlighten, the corporates, on how they can be able to take up this cyber risk insurance. Because as rightly said, it's happening. And once it happens and you don't have insurance in place, you know the amount of money that you're going to lose.
So, Doctor, what do you see now with the trend we're going, the talk of NIRA, the promises made by people like Mr. Molade? Yeah. So, what do you see in the nearest future?
All right. The introduction of NIRA has brought hope to not just the industry, but to Nigerians. At the announcement of NIRA, we saw that the stock market for insurance industry.
Yeah, we saw a lot of movement there, but it's calmed down now.
Yes.
So people need to wake up again.
Yes, we are doing all of that. And the commission, they are not sleeping. They're working tirelessly to see that every provision of NIRA is not just in the paper, but also is being demonstrated in business reality. And that's one of the reasons we are having our insurance directors conference, which is powered by NICOM. It's a program of NICOM that is being organized by the college. So it's an opportunity to speak to directors of insurance
just
companies.
a minute, Doctor, please.
Okay.
Just a minute. Because for our DSTV viewers, we need to lead you now to Abuja. It's the opening ceremony of the 4th Annual National Conference organized by the Forum of Former Deputy Governors of Nigeria, and it's holding in Abuja. But that's for our DSTV viewers. For our other viewers, you're still here with us on Business Morning. And if you're watching on DSTV and you want to continue watching here, just switch to the YouTube channel, the next platform just beside the one you were using before, and you stay with us right here on Business Morning. So, Doctor, do you want to conclude your thoughts?
Yes. So we are looking forward to seeing the insurance penetration grow in comparison.
And you think with what you're doing is going to lead to growth?
Definitely, because when the capital strength of the industry is increased, the ability to absorb more risk is there. Claim settlements will be upped, and also they will embrace technology, and people have trust to do businesses with insurance. So NIRA is here to propel businesses, grow our networks, and ensure that the penetration of insurance industry lifts the normal and make a giant strike.
Normal. All right, Dr. Chizoba Hyogu, he's Director, College of Insurance and Financial Management. Thank you so much for your thoughts, as well as the chairman of the college, that's the College of Insurance and Financial Management, and he's also the Managing Director and Chief Executive Officer of Stanbic IBTC Insurance. Thank you so much for your time, Mr. Akinjide Rimolad.
Thank you so much, Ine, for having us. Really appreciate this. So what I'll just tell Nigerians is that insurance is for real. Make sure that all your assets and your lives are well protected. And be rest assured, it will give you, ability to be able to sleep comfortably. Thank you very much.
All right, thank you so much for the parting words. Let's take a break now. When we come back, we'll head to the global space. Please stay with us. Time to go global now. We're starting from where the United States President Donald Trump has met with Japan's first female Prime Minister, Tsunai Takaichi, in Tokyo, welcoming her pledge to accelerate a military buildup and signing deals on trade and critical minerals. Well, Trump had lavished praise on Takaichi, saying that she would be a great leader, while the Prime Minister says that she planned to nominate the U.S. president for a Nobel Peace Prize. And we know that President Trump is very sensitive about this. So Takaichi, a close ally of Trump's friend and golfing partner, the Japanese Prime Minister Shinzo Abe, is also expected to offer a package of U.S. investments under a $550 billion deal agreed on this year. And those gestures may temper any Trump demands for Tokyo to spend more on defending islands from an increasingly assertive China, which Takaichi seeks to head off by pledging last week to fast-track plans to increase defense spending to 2% of the country's GDP. And in EU, the European car registration increased by 0.9% in the first 9 months of 2025 compared to the same period last year. And this marks the third consecutive month of growth, according to data released by the European Automobile Manufacturers Association. September alone posted a strong 10% increase, partly driven by a new model launch, and battery electric vehicles maintain a 16.1 market share year to date, up from 13.1 in the same period of last year, but still below the pace needed for the ongoing transition to electric mobility. Hybrid electric vehicles remain the most popular alternative powertrain also among EU consumers, and that captured 34.7% of the market. New registrations for hybrids rose to 2.793 million units. That's a significant growth in major markets. And that's it on Business Morning today. Thank you so much for being a part of this 55 minutes journey. I'll see you at 1:30 where I'll give you updates from the world of business. I'm Amy John Mekwa. Talk to you later.